Welcome to interest.co.nz's morning briefing of what's news here and around the world. Everything you need to start the day in 90 seconds at 9 o'clock. Starting now with an extraordinary story. News of a massive fraud that may even have spooked the Fed into its emergency rate cut this week. Societe Generale has revealed a junior trader, Jerome Kerviel, lost $7.2 billion US through a series of fraudulent trades on European stock futures. The biggest individual fraud in the history of banking forced France's second largest bank to launch an emergency capital raising of 5.5 billion euros to shore up its balance sheet. Societe Generale discovered the fraud on the weekend and unwound the trades on Monday. This was the day when European markets in particular appeared to be slammed very heavily. This helped rush the Fed into its panic 75 basis point rate cut. There are now questions about why the Bank of France didn't tell the Fed about this before the emergency cut, and raising fears the Fed was spooked unnecessarily into its cut. And in more credit crunch news, global banks are unable to find buyers for $230 billion US backlog of high-yield debt linked to private equity and other leveraged buyouts. That's according to Bloomberg overnight. This raises the risk of yet more write-offs and capital raisings for global banks. And in news closer to home, data on New Zealand credit card use, job vacancies and manufacturing performance in December all indicate economic growth is slowing across the retail and manufacturing sectors. This is becoming clearer as the impact of high interest rates and a higher currency suck air out of spending. That was 90 seconds at 9 o'clock. I'm Bernard Hickey for interest.co.nz.